Stefan, let's start with the very obvious question that recession could indeed be on the horizon. You spent a lot of your career at that sort of nexus of economics and trade. Obviously, the coronavirus is a huge threat to that. What would you be worried about if you were still in that seat about the impact on global markets?
Well, not to disappoint you, Ed, the first thing I'd say is nobody knows. This is uncharted territory. So we've never, in at least the last 100 years, been through something approaching a global pandemic. And I think looking at past analogies, or at least recent analogies to how the economy has performed, is a mistake on the one hand. On the other hand, I would say that the labor market remains very, very strong. Obviously, unemployment is at something like a 50-year low. Consumer confidence is hanging in there. The housing market is strong. And so the likelihood, at least in my view, about what is going to come from the coronavirus is going to be an economic disruption. It may be more or less severe, and we can talk about that. But I think the likelihood of a U.S. recession, at least where we're sitting at the moment, is not high.
Well, what does it mean? We know what it means for global supply chains. A lot of that is baked in. We sort of know roughly what it means for the health and well-being of a lot of people around the world. What does it mean longer term for the geopolitical relationships, trade tensions, et cetera? Because that was your focus.
Yeah, and I think that is really the big question, right? So people are very focused on what the markets are doing, and obviously we're seeing extraordinary volatility, and I think the volatility is a reflection of the uncertainty that I started with in my opening comment. What is far less clear is this going to be used as further evidence by those folks that are talking about the evils of globalization. So is it going to feed into this notion of a decoupling world where we should be having trade policies which separate us into a bipolar landscape, with China obviously being one pillar of that bipolar landscape and the U.S. being another? What is it going to mean for the EU? How does the EU function if, in fact, borders are closed? What is that going to mean for elections around the world? And what is that going to mean for our election?
Closer to home, M&A is obviously another area you're very focused on, something you and I have spent many hours discussing. What does something like this mean for deals and the willingness of companies to go out and execute meaningful transactions?
Well, I've actually been somewhat surprised about some of the large transactions that have been announced over the last couple of weeks. You saw a couple of very big healthcare deals. You saw a big industrial deal, ThyssenKrupp selling their elevator business for $19 billion. You saw Morgan Stanley's acquisition. Now, for sure, those were deals that were in the making for many months. But what I would say historically, if you look back, when we have markets that have this degree of volatility, that has caused people to go on the sidelines. How do you think about valuation? It's very, very hard when the market's up and down 3-4 points a day, one. But two, to your earlier point, how do you think about long-range planning? And that really is the harder question for boards of directors. How do you think about global supply chains? Should assets and capital be moved out from certain parts of the world back to the United States? How do you think about demand? Is this huge Chinese market and Asian markets going to continue to be available for international companies or not?
Well, those are the questions, but you're in the business of advising a lot of these companies, a lot of these boards. So what are the answers?
Well, what I've been saying is the following, which is, one, the financial markets are not the real economy. So we need to focus first on the real economy. And to me, going back to your question, is this going to presage a recession or not? I would be very focused on, one, consumer confidence. 70-ish% of our economy is based on the consumer. So focus, one, on consumer confidence levels, and two, the labor market. To the extent that we're seeing layoffs and companies furloughing employees, that means this is going to be more significant. The second is if we do actually have a downturn in the economy, what is the rebound likely to be? So on Bloomberg, you have a lot of economists talking about is it going to be U-shaped, V-shaped, or L-shaped. And I think this is not a financial crisis. So when you have an exogenous event like a pandemic or any sort of health care issue or a weather issue, the recoveries have tended to be more V-shaped, which means you bounce back more quickly. The question is, if this is now used as further fodder to a dislocation in global markets, then you could imagine the recovery is much more L-shaped, meaning it's going to have a much longer tail and be much more significant in terms of global growth going forward.